Very good afternoon. It's 2 p.m. Welcome. This is the final episode of Market View this week. My name is Lungile Makakula. Thank you for joining us. The current situation globally leads us to consider that sustainable development needs to be a global priority to improve the quality of life. There is a need for sustainable finance to support this. Savings and credit cooperatives could help to achieve this impact as they serve the microfinance and microlending market. They facilitate the financial inclusion of the most vulnerable people, most of whom live in rural areas and are members of organizations such as agricultural cooperatives and associations. Earlier today, the National Federation of Cooperatives met with CEOs of savings and credit co-ops in the country to present to them an outlook of the economy and the role played by co-ops in economic growth. Economist Sanele Sibiya will join us for this discussion, then later give us an overview of financial markets this afternoon. Also present at the meeting was Principal Economist Welcome Ngumalo, who made a presentation on economic growth. After the break, we'll play you a clip of his presentation. Stay tuned.
Do you reside in any of the Ubombo sugar communities or nearby areas? Here is a notice. A door-to-door TV license exercise will be conducted in your area from the 19th to the 28th of June 2024. The personnel conducting this exercise would be easily recognizable by their attire bearing the Eswatini TV logo and their individual name tags. Your cooperation is valuable to us, and we respectfully request that you participate in this exercise truthfully. Do not be deceived. It is not appropriate for anyone to request money for a television license. Make payment for your TV license by using MTN Mobile Money at 76 222 000 or by visiting the nearest post office. Eswatini TV, Sibugo Semaswati.
Welcome back. This is Market View. Thank you for staying with us. As mentioned earlier, the National Federation of the Cooperatives met with CEOs of the savings and co-ops for an economic outlook meeting. At the meeting, Central Bank Principal Economist Research Welcome Ngumalo made a presentation on the latest economic outlook and capital projects implemented by government, such as the Mkonvo Ngwavuma Dam project worth 2.6 billion Amalangini. He said this is one of many projects that will ensure that economic growth is achieved. Let's listen.
That we are having as a country is investment mainly in two areas. One is the dam. The country is investing in a dam construction. We are aware, Bageni Dam. The bigger project is called the Mkonvongwa Water Augmentation Project, and it involves taking water. One of the other bigger rivers, Mkol, right? Taking water from Kolbo into Ngwavuma. As we know, Ngwavuma is a relatively dry area, so that's why it's called an augmentation project. So what will happen is that the country is constructing a big dam in the Ngwavuma River, and it will take water from the Mkondo River. That project is at phase, it's worth 2.6 billion, and it has already commenced. So we anticipate that this project is actually a huge project that will lead big growth outcomes for the economy. Because as you know, when you're doing dam construction, there's lot that is involved. All sectors actually are involved. You need quality store, you need transporters to be doing that. And there will be also downstream benefits to come out of that project, including that we will develop close to 30,000 hectares of land down in Lavuma side. You can see that if the economy is to reach the potential of what it plans with that project, then the economy will be actually very far. If we think of it far, 5, 7, 10 years from now, because if you want to develop a segment, you start by putting water. Once you have water, then you can see those who might be coming from around this Popaneni, they know the impact that was brought by the Lubovane Dam and the agricultural activity and other spin-offs that came out of that project of Lucy. The other projects that we have in the medium term are probably on the energy side. As you know, as a country, we are not sufficient in terms of electricity. To put it to perspective, we produce less than 25% of what we demand in terms of electricity. The rest we import. Seeing that now we are pushing in our agenda of more solar, more biomass investment, as well as the hydro generation, which has been traditionally our form of generating electricity. We see that as an economy, those major projects, as I'm mentioning, are actually the driver of the growth that we actually mentioned to be around the 4% or above 3% region in the medium term. It's mainly driven by that. But it is important to highlight that we have big risks when it comes to looking at the economy. Sometimes the economy, you can see one thing now, you can come tomorrow, it can be very, very different in terms of what you can expect. One of the things that is the biggest risk in the economic outlook is actually climate change. And the way climate change affects us, if you go just down one slide, we'll come back to this one, just to get a demonstration. It actually doesn't care whether you are having irrigation or you are not having irrigation. In the past, we used to think more of climate change as dry spells, droughts, and things like that. But now the way it's actually, it changes so rapidly. You get everything. You get too much rain, too much dry spells, storms, and all these things affect the output that you can have. So to put in perspective, our maize production, as an example, is we did have a good production somewhere around 2022. We were at about 127,000 metric tons of maize, and if you think of the requirement that we have as a country, it is 140,000 metric tons. So we're close to cutting on that gap, but we fell short on smaller magnitudes. But because of the weather patterns, now we can observe that our maize production from the 127,000 went down to 85. Now we are projecting even a further decline to 79, 74,000 thereabout in terms of maize output. And this is a consequence of the climate change. So in one end, we had a lot of fears last year. We didn't go and plow because we feared that it was going to be an El Nino year. There were some rains. For those who went to plow around January and Feb, first there was too many rains in December that were followed by a prolonged dry spell, and we end up with outcomes that are like that one. On a positive note, I should say, every dark cloud does have a silver lining go up once. Every dark cloud has a silver lining because the rains that we are receiving actually pushed our dams in the recent past. And what that has done is that we have seen our production of hydropower electricity actually increase over the past 2 to 5 years because of having the abundant water. Even though it wasn't good for sugar, it supported some other sectors. South African economy in general, as we say, is our big brother. We export 70% to that market. We import 71% from that market. So it is a huge market for us. That's why if South Africa is having challenges, we will also will be affected. So one of the things that we saw, load shedding created broad opportunities and challenges for us. Some of our customers couldn't buy our products because they were under load shedding, therefore it affected our sales. But also for some other sectors, we actually benefited from South Africa being under load shedding because South Africa didn't fulfill some of their orders, and some of those orders had to come to us where we had production capacity. We were filling in on those gaps. So it was a good interaction that was happening just on the basis of the load shedding. Obviously, this is only relevant because we were not being load shedded by South Africa ourselves, even though we are getting 70% of our power from South Africa. So we were able to continue. For some reason, we could survive that and tap into some of those opportunities that were presented. The other challenge that we are facing in South Africa with respect to trade is that the South African economy is having big logistical challenges, particularly in the ports. So you will find there are two dimensions that are currently happening. One is that the ports, the Durban port, Richards Bay port, which is where we are pushing our exports, they are highly congested. And there's need for changes there, such that some of our sectors have actually been affected because our goods were staying at the port, not moving. And it so happened in Richards Bay, for example, that there was a fire that burst at the port, and our goods were contaminated before they could even go to an export market. So there are some of the challenges that we get as an economy just happening, inheriting them from what is happening in South Africa. The other development that we see touches on the textile industry. In South Africa, they actually have moved to have a policy that is to protect their textile industry. And in so doing, they make our textile industry non-competitive in the sense that they make us to pay a certain duty. The duty is around 22% when we are moving our products in there. What it does is that our textile industry, which was leading in the South African market, as you will recall, even during the time when we lost AGOA, we were relying on the South African market. That market conditions have actually deteriorated because of that. Because now South Africa is trying to protect their textile industry. I think you might have seen of late that most textile companies are actually laying off at a significant pace, particularly in Matapa, because of lack of orders. And the developments in South Africa in terms of their protectionism policies is one of the reasons that we see that is driving that.
All right, so that was Welcome Nxumalo, the principal economist research at the Central Bank of Eswatini, making a presentation at the National Cooperatives Federation of Eswatini meeting with CEOs of savings and credit co-ops. He was saying that with capital projects, Eswatini economy can be achieved or can reach its potential. After the break, we connect with Sanele Sbiya to discuss the role of savings and credit cooperatives to the economic growth.
Sabatandi ukuthi njengalokhu sivile sive sikhulume.
Welcome back. It's 13 minutes after 2. Thank you for staying with us. You're still watching Market View. President of the National Cooperatives Federation of Eswatini's Fiso Mhlongo has disclosed that savings and credit cooperatives in the country own assets worth 2.7 billion emalangeni. He says co-ops contribute immensely to the economy, and this is evident by the fact that a sum of 1.8 billion emalangeni is in circulation amongst Emaswati who have loaned it. He disclosed this at an economic outlook meeting with CEOs of savings and credit co-ops, where he was making a presentation.
Libanjiswano nginikethe isiqiniseko ukuthi lidlala inzima lenkulu mhlambe ku social development emaswati onke. So kufanele sila libanjiswaneni singabaleki kakhulu lokubuka ukuthi umnotho ume kanjani ngoba leli galelo noma leli chaza lesidlalako likhulu kakhulu kule ikakhulu kubuka the social economy of Eswatini. Asifake nemandla kakhulu malunga etinhlangano to close the gap in the economy as the cooperatives. Whatever gap lesibonako, asifake nemandla ethu onke to close that gap. Lokunye kulete kongane kubolekisa singathi siyakuthanda etinhlanganweni tema savings and credit ukuthi let us initiate a product which will benefit emalunga ethu to be able to balance the business and the social aspect yalelunga ithuthuke ndawo tonke. Lokunye lesingakukhuthaza singasi asizame ukuthi noma ngayiphi indlela sizame kusherisha lolwati lesinalo kuze mhlawumbe live lisikhone kusirecognize njengoma cooperative. Nawubuka la ngaphandle asset base yethu sithi inhlangothi elibambiswayo roughly plus or minus 2.7 billion ma assets la banjwe inhlangothi elibambiswayo. Nawubuka loans la khona plus or minus 1.8 billion loans imali circulation yemalunga. Nawubuka savings ethu lesiwongile nakhona is plus or minus 2 billion savings that rotate timali tibanje emaswati timali temalunga.
That is Sifiso Mhlongo, the president of NCFE, making his presentation. He says they have 2 billion malangeni worth of savings. Connecting with us now, we have in-house economist Sanel Sbia to discuss this further. Mr. Sbia, very good afternoon. Welcome to the program. Thank you for joining us. We are discussing the role of savings and credit co-ops. How do they contribute to the economy? As I've just mentioned, that the president of the NCFC has said they own assets worth 2.7 billion malangeni, and they borrowed and money in circulation amongst Eswatini is worth 1.8 billion malangeni. What role do they play in the economic growth of Eswatini?
Good afternoon, Lulu, and good afternoon to the viewer. So that is the role that credit cooperatives play in the economy. If you're looking at the significant figure in terms of the asset value or the capitalization of cooperatives, sitting at around, the 2.7 billion, that's a very beautiful sum of money, which in the absence of cooperatives, we're not going to be able to mobilize because, the way our cooperatives work is members are put in their money, and together that money is also invested. So that investment function of cooperatives does play a role in actually improving the overall economic growth of the country. So if you look at around the country, you will see that most of the cooperatives own buildings. So now that is money that is flowing into the economy, and over and above, you see the amount of money that is actually loaned out to members. So that actually somehow also creates what we call financial inclusion, and most so because you find that these loans are actually loaned at very low interest rates compared to if one were to go to another authorized service credit provider. So you'd find that was some work. So that improves the velocity of money and flow within the economy through that mobilization and loaning out members. And we've also seen quite a number of members starting up businesses over and above their personal consumption objectives, but they've utilized the money through co-ops to start businesses. And ideally, this is money that they wouldn't have. And also, if you look at the way that co-ops are structured, that you borrow against your savings. So in a way, it does circumvent the collateral lending that banks would require, in that they would just say, we'll take your lendings as collateral, and if we will take your savings as collateral, and then in the event that you fail to pay, we find other modalities. And the fact that cooperative owners own cooperatives, the savers own the cooperative, so that also improves the resource flow and the rate at which the loans perform, in that they are almost all fully paid. So those are the avenues that we are seeing for economic growth, and that's a story that is shared across the region and across the globe. If you look into the success stories that are coming out from India, you will realize that it is through cooperatives that a lot of rural communities were able to grow and develop. And we've seen in India, we've seen in Uganda, where cooperatives just grow beyond just being a cooperative to being banks. That's the story of the Centenary Bank in Uganda. So the cooperatives do play quite a significant role, Lulu. That's why I can leave it for now.
All right, so one last question before we end the interview. You touched on access to finance. How much of a problem is access to finance in the country? Are these savings and credit cooperatives a key channel for promoting financial inclusion?
Um, yes, they are becoming a key channel for promoting financial inclusion and over and above improving the depth of the financial sector. By depth, we mean how many people are now utilizing these services and how many people are now looking into borrowings and, people who would ideally have been left out of the mainstream financial sector, but they are able to access financial services through cooperatives, and that would be your loans and all these other modalities that, we find that quite a number of people would not be able to access that finance. So we are seeing that the role that they play both in terms of depth and in terms of inclusion. So it's quite significant. That's why it's imperative to continuously support the development of co-ops as a country.
All right. No, thank you so much for your insights, Mr. Sibiya. It's 20 minutes after 2. Let's go for an ad break. He comes back for today's financial markets.
Be sure to catch Business Watch every Wednesday between 2 p.m. to 3 p.m., where we feature the latest updates on business news, market trends, and exclusive interviews with industry leaders, as well as insights on emerging small and medium enterprises in the commercial sector. Business Watch, your business leader.
Do you reside in any of the Ubombo sugar communities or nearby areas? Here is a notice. A door-to-door TV license exercise will be conducted in your area from the 19th to the 28th of June 2024. The personnel conducting this exercise would be easily recognizable by their attire bearing the Eswatini TV logo and their individual name tags. Your cooperation is valuable to us, and we respectfully request that you participate in this exercise truthfully. Do not be deceived. It is not appropriate for anyone to request money for a television license. Make payment for your TV license by using MTN Mobile Money at 76222000 or by visiting the nearest post office. Eswatini TV, Sibugo Semaswati.
Welcome back. This is Market View. It's 22 minutes after 2. Thank you for staying with us. We want to take a look at today's financial markets. We connect with Mr. Sibiya, in-house economist. Mr. Sibiya, welcome back again. Let's look at currencies, particularly the rand. We saw it yesterday. It was quite strong as it was the inauguration event for President Cyril Ramaphosa. Can you expect changes this week, looking at considering the fact that he may announce his cabinet soon?
Thank you, Lulu. No, when you're looking at the exchange, the currency market, we are seeing, the domestic currency really just rallying across international markets, but we are seeing it lose a bit of strength today purely because markets are anticipating on when the president is actually going to announce his cabinet. So that's what markets are now waiting to see. But we saw yesterday it actually broke below the 18 mark and went into the 17 region. It was quite strong. So it was basically an endorsement of the markets. Really did just endorse the re-election of President Ramaphosa. So we are just now waiting to see how his cabinet is going to shape up. But generally, we are seeing a relatively weaker performance, but still within a very strong region if you consider the medium term and just the past 12 months. So we are still within a strong region, but we are awaiting to see, and we do hope that if he gives the markets the cabinet they want, we should see it coming in below the 18 mark into the 17 region. And if the cabinet starts delivering, we should actually see it sustaining that momentum if we are holding all other factors in the international economy a bit constant.
Okay, so looking at commodities today, I see gold is still trading at 2.3 US dollars. It's doing quite well even today. Take us through these figures, gold and crude oil today.
So if we're looking at gold, it's shining a bit today, because there's still that expectation of the news to come out from the US, and that's just basically considering the fact that markets were closed in the US yesterday for the Juneteenth holiday. So gold actually just benefited a bit on that background. So as we are waiting to see how markets are actually going to be performing today, and as we receive, the inflation data coming out of the US, and the commentary from the Federal Reserve Bank in terms of where they're expecting to see interest rates going in this short to medium term. So we might see gold gaining a bit if we are getting a bit of negative news coming out from that address. So we're awaiting about 4 addresses from the Federal Reserve Bank today before closing bells. And then in terms of crude oil, what we are seeing is there's just been that increase into the 85 region that's actually spurred into motion by the fact that we expected the ceasefire within Gaza and within Israel, between Israel and Palestine, to actually hold a bit. But what we woke up to today, and a bit what we started seeing yesterday, was the fact that there were more tanks moving into Gaza. That means Israel is planning another offensive, and then we just are waiting to see if that is not going to trickle into the overall region. So there are those fears now trickling into the market of these tensions are flowing out into the broader region, but I guess that's something that we are waiting to see going forward, Lulu.
So what's the latest today on international markets when we look at the US markets, European and Asian markets?
So if we are looking at the US markets, there has been that renewed strength, the renewed hope in the markets. But so you will see that when markets were just preparing for an opening today, if you look at Nasdaq futures, they did show signs of positive anticipation in terms of the news that are going to come out from the Federal Reserve Bank, and while we are still awaiting that inflation data to inform market moves. But one thing that is interesting about the US markets is the fact that they actually closed a bit higher on Tuesday. You're seeing everything is on the red. But one interesting thing is, albeit this interest rate uncertainty, markets are still trading at all-time highs in the US. So now that shows the resilience of the US market and the growth and the strong data coming out in terms of growth that we are expecting in the US, and the basic fundamentals of the micro nitty-gritties within each company. And then if we move into Europe, again, we are seeing relatively good performance there, but that's actually on the background that most European banks have actually held their interest rates steady, including the Bank of England. So what we are seeing there is markets really just rallying to those news. They were not really expecting any cut in that. But what we are seeing interesting with the London story is, that the pound took a bit of a dive during, when the Bank of England announced that. So that somehow benefits the overall markets in the UK, because it makes UK stocks relatively cheaper in the overall European region. And if you move into Germany, you will see that the European Central Bank has continued to state and reaffirm markets that there is yet another 1 or 2 interest rates cuts that are going to come into play before the end of the year. And then if you look into France, we are still trailing below the 8,000 mark, while markets are trying to see what is going to happen in terms of the election and all of those things. So those are the things that are happening within the French market. And then if we move into the Asian markets, we are seeing that mixed performance within the Asian markets. What we are seeing there is, if you look into Japan is actually trading a bit better. But if you come into mainland China, you will see that, China has actually lost a bit. That's basically on the background of the Chinese central bank also holding interest rates constant. But we know that within the Chinese market there are those moves and those fears of the growth that China has always attained not being attainable this year. So the fundamentals are really not looking up in the short to medium term, looking also at the property sector in China. And then if you come into South Africa, we saw that markets did really endorse the election of the president. We saw the Johannesburg Stock Exchange going above the 80,000 mark and just losing a bit of momentum earlier on in today's trade, still awaiting the news on when the president is likely to announce his cabinet. But we did expect that to be today, but it seems there's still just no news, which is somehow expected considering it's now a government of national unity or a coalition. So there's still those fights in between these parties that one should expect to see. And then still in the domestic markets, nothing has moved post, post what you call your dividend season. You should expect other movements probably when you come into another dividend season in October. Thank you.
All right. Thank you, Mr. Sbia, for that analysis this Thursday afternoon. And that's it for our market analysis. And that's it for our program today. Thank you for joining us. We'll see you next week, Monday, same time, 2 p.m. Have a lovely day and a lovely weekend.